Alright, what's up everyone? Welcome back to the channel. Today's video we have a pretty exciting one. We're having a look at the top 10 most popular stocks on the Robinhood app. They just recently released these statistics and they're pretty informative of the way millennials think. So if you don't know what Robinhood is, it's basically an app. We don't have it in Europe, or it's only in the US at the moment, but I think they're expanding into other countries. But regardless, it's an app where you can buy stocks for free, just for investing in stocks, and it's really simple to use and really clear and great for people who are well used to using their phone for doing everything. Whereas older people who are investing generally like to they go to a building and talk to their stockbroker, and then they'll invest. However, the Robinhood app, you just do it all through your phone, so it's perfect for millennials. So this gives us a really clear insight into the type of thinking that millennials are currently making. So in this video, I'm going to run through the top 10 most popular stocks. I'll give you my opinion on each of these stocks. And there's kind of a common theme with all of these stocks. Well, not all of them, but with a few of these stocks, there's a really common theme. So let's see. I'll tell you at the end what the theme was. So let's see if you can work it out before I tell you. So out of the 10 stocks today, I actually own 4 of the 10. So I'll be able to give you a good insight into those 4 for sure. And a few of the other ones I have some knowledge in and I've researched before. And then a couple of them I haven't looked into very deeply at all. So just to let you know of that. Just before we begin, I really appreciate if you could give me a thumbs up just to get the channel off the ground. And if you're interested in investing or investing in general, investing in stocks or investing in general, make sure to subscribe. And if you're already a subscriber, maybe hit the notification bell so you're always informed when I make a video, because it mightn't pop up in your home feed. So with all that said, let's get straight into the video. So kicking things off, we have Apple stock. So I'll just explain what this graph is showing us. So basically the red line or the pink line is the stock price over time of the last couple of years, and the green line is the popularity of that stock. So all the graphs from now on are showing that. So as you can see clearly how the popularity of Apple stock has increased during the coronavirus crash that happened in March. So that big drop in price in the pink line, that was from the coronavirus crash, and you can clearly see that millennials were buying up the stock when it started buying at a pretty good time when it started to reach its lows. So clearly I feel like there was a lot of people wanting to get in on Apple. They were sitting on the sidelines waiting for a buying opportunity, and this was probably their buying opportunity. So what are my thoughts on Apple? Well, personally, I think it's still a little bit expensive at these prices, but it's a pretty safe bet. People are always going to get iPhones. The AirPods are taking off. Apple Music, maybe that could be a good growth catalyst for them. And Macs, fantastic. They're the best computers in my opinion. So yeah, pretty safe bet. Do I think I think it might outperform the market, might underperform, but to be honest, it's not exciting enough for me. If you're thinking of investing in Apple at these prices, it might be just as good to invest in the S&P 500. I do have some Apple shares. I bought a couple of shares when the stock price was in the 180s. When iPhone sales came out to be very weak, everyone kind of panicked. It's like, oh, they're not making much money from iPhones. So I bought some shares there, and I've already done quite well, like 80% up or something. I'd only really be interested in buying more Apple shares if there was another kind of big thing that dropped the stock price, because it's really, really elevated in my opinion at these prices. So a rating, I'll give a rating for each stock. So this one's going to get a rating of 7 out of 10. And it would be a 10 out of 10, except the stock price is a little bit high for myself. Alright, so the next stock's a little bit more exciting. So number 9 on the list is Carnival Cruise Line. So have a look at this stock price. Absolutely fell off the floor and the popularity spiked. But as you can see, people did buy it at a low price. The popularity only started to really increase when the stock jumped below about $15 a share. So people got it for a low price. Does that mean it's a good price? Not necessarily. So the popularity of this stock, as you can see, completely skyrocketed when Carnival started hitting that $10 range, and people seem to got a really low price. Unlike myself, this is the second stock out of the 10 that I own, and yeah, I bought Carnival Cruise before the whole coronavirus pandemic, unfortunately, so I did pretty poorly in that, needless to say. down about 60% or so. But I'm just holding, and I'm not really interested in adding to my position at these prices. It has already increased quite a lot from the bottom. It bottomed out at about $8, and it's already about $15 now. So for me, it's definitely just a hold, and I think people are kind of over exaggerating how likely it is that they'll get back to that $40 range. They've had to take on a huge amount of debt, so that debt has to be paid off. So because they have that debt now, that really hinders the value of the company. That makes the company less valuable because that debt has to be paid off. So you have to keep that in mind. And to add to that, they diluted the shareholders by selling a lot of shares on the public market to raise funds. So your shares are worth less because of the diluted shareholders. They're not going to be earning very much money they probably won't get back to 2019 levels of revenue for probably 5 years, in my opinion. It's probably a fair price. I wouldn't bank on it going back to $40 anytime soon. And everyone and their granny is asking me about cruise stocks and whether I'd be interested in buying them. And for me, I don't think so. I don't think this is a great buy, to be honest. So I'm going to give it a rating of 6 out of 10. So coming in at number 8 is Microsoft. I'm not going to go too in-depth on Microsoft because I've never actually researched the company. I'm not actually interested in this stock personally, but I do think it would be a great stock. And if you're interested in me analysing this company, please let me know in the comments below. But I'm not going to comment on this one. Alright, so number 6 and number 7 are kind of two in the same. So I'll just show you. Number 7 is Delta Airlines and number 6 is American Airlines. And their stock and popularity charts seem pretty similar. So again, like Carnival Cruise, the Robinhood users have been buying this when it's just because it's crashed significantly. Now, is this a good idea? We'll see. Okay, I think the airline industry will eventually get back to its former glory, but I think it will take a few years, needless to say. And I think everyone knows it will get back to its former glory. So I don't think these are potentially very good prices. Like, they're going to lose a lot of money in the next few years. So that's going to really detract from their value as a company because they're not going to be able to, they're going to have to take out debt, etc. And there is always the potentiality of one of them going bankrupt. So if I were to invest in one of the American airlines, I'd probably invest in the one with the best balance sheet, and I think that's Southwest. However, I'm European, I'm from Ireland, so I've actually analysed European airlines to see which one of them is the best airline to invest in. So if you're American and want to potentially diversify into European, I've done a video analysing the biggest airlines in Europe, so I'll link it up there. But just to close, I'm not currently invested in any airline stocks. I thought I was going to invest in one of them, but in the end, I just think there's too much uncertainty, and I think this is kind of like a high risk, medium reward stock. So what's the point in that? If you're going to go high risk, you might as well go for something that's really high reward. And just because a stock price has crashed so much doesn't necessarily mean it'll get back to those levels. I think it will increase probably, but not to those levels for a long time. Just a final closing point on the airline stocks. We have to take a look at what the big players, the big boys in the investing world are doing. And I'm not sure if you've seen, but Warren Buffett sold all of his airline stocks for a big loss. So Warren Buffett basically sold his shares to these Robinhood investors, to the Robinhood users. So just keep that in mind. Look what the big boys are doing. They don't have belief in this. Maybe it's not the best investment. So I'll give this a rating of 5 out of 10. So now onto the top 5 most popular stocks. And coming in at number 5 is GoPro. Now this stock has fallen for so many years. It used to be like a $80 stock or something. Now it's like $2 or $3. But obviously that's because people thought, oh, everyone would get GoPros when traveling or whatever. But then cameras on telephones or mobile phones got so good that it's only really a niche market that needs GoPros anymore, like action adventure, snowboarders, skiers, mountain bikers, surfers. But that niche market is still there, and GoPro is the biggest name in that market for those action cameras. So I'm starting to get a little bit more interested in GoPro for sure at these really low prices. They're almost like they've been losing money for so many years, but they're actually getting pretty close to profitability now. and their market cap is really, really, really low. Although it has jumped back up a bit since it crashed in March. So we can see the stock price has come back up a little bit to its pre-March price, but the popularity skyrocketed. But I think maybe under the $3 range for GoPro could actually be a good buy finally. I have a GoPro myself. I have a really old one. But I've seen the new 360-degree cameras. They're pretty cool. So maybe if GoPro can come out with some new products that are enticing, or else the price gets back under $3, it could be very interesting. Their price to sales ratio is really, really low at the moment, and their balance sheet actually is okay. So if you want me to do a deep dive analysis on GoPro, let me know in the comments, because it could be a pretty interesting stock to look into. So I'm going to give this one a rating of 7 out of 10, maybe 6 out of 10, because it's kind of gone back up to the previous prices that it was before the coronavirus. But yeah, they're not going to be making much money, as no one's going to really be traveling or doing ski sports or action sports for a minute. But nevertheless, as long as we recognize it's a niche market and it's never ever going to get back to those previous prices that the stock price was at, it could potentially be a nice little 2 to 3x in 10 years if they come out with some interesting products, or their products just get much, much better. But at the same time, like, what else can they do? Unless they can come out with another new feature like the 360-degree feature, it's not that interesting, because like, they already have the highest quality. Like, the GoPros aren't really getting any better from the last generation, so it's kind of hard to sell new things. So unless they get back into the drone business, or unless they come up with some other product that's fantastic, might not be a great buy either. Alright, coming in at number 4 is Disney. Now, this is one of my favorite stocks. I've done a video on Disney stock, a full analysis. But yeah, the popularity of this stock has really jumped up since the coronavirus. So you can see the Robinhood users are kind of somewhat smart in that they see, like, okay, if a stock price drops, it might be a good time to buy. I think in this case, potentially is. However, Disney has had to close all their parks for the foreseeable future. So they're not going to be making very much money there. I just want to talk about the parks for a minute. When the coronavirus passes, I think Disney do have that fantastic moat. Like, there's not that many other parks that are in competition with them, and none of them really have that Disneyland feel. Whereas with the airline stocks or the cruise stocks, like, people just go for the cheapest one, or there's not really as much brand moat with those industries like there is with Disney. So I think once the coronavirus passes, I think Disney will get back to 29 levels faster than those other few industries. And just to add to that, the demand for the parks is definitely there. Firstly, children don't really get affected by coronavirus nearly as much as elderly people. So parents won't be as worried to bring their children back to the parks once all this has kind of died down and coronavirus has started to subside a bit. And already they've scheduled to open some of their parks at lower capacities, and that's already sold out. So the demand for the parks is definitely there. And let's not even mention they have the Disney Plus, kind of the ace in their sleeve, and that adds a huge amount of value in the near term and the long term, in my opinion, as well as their movies, the Marvel, etc., etc. So if you want a full detailed analysis on Disney stock, I'll leave it up there. Alright, so yeah, that's all I want to say for Disney. Number 3 is, let's get on with it, into our top 3 most popular ones. Number 3 is General Electric. Now, this is an American stock, so just like with the American Airlines, I've never used the service. I can't really ever use the service, so I'm not really going to comment on it. It's a really old company. If you want a detailed analysis, I'm sure someone else has done it on YouTube, but I'm probably not the person to ask. So let's just move straight on. And coming in at number 2 is Ford. So a lot of people don't realize, but car companies are cyclical industries. So when times are good, a lot of people buy cars, and when times are bad, no one buys cars. But it's not even just that. So when times are bad, everyone needs a car eventually. But when times are bad, people don't generally buy a car. But there's a pending up demand for cars. So when times come back, there's all these people who do need cars but haven't decided to buy one during the bad times. So there's a pent up demand for cars. So once the time there's a certain amount of cars that need to be sold every year. So that's why car companies really have a cyclical industry, because they'll sell a huge number of cars when times are good, and they could do that for many years in a row as the previous demand from the bad times when people weren't buying any cars, when they all get filled. So the best time to buy a car company or a cyclical industry like that is when the demand starts to get filled and when times start getting good again. You don't want to be buying it when times are starting to get bad. You want that demand to start getting filled, that demand to start getting increased. At the moment though, Ford is just beginning to go into the negative part of the cycle. So just to keep that in mind, regardless of coronavirus, regardless of anything else, it's a cyclical industry. So if you want to get into cyclical industries, you got to learn a bit about it, cyclical industries. Hopefully you can start to see the common theme with these stocks that the Robinhood users are going after. They're trying to find the stocks that have been hit the most and that they think won't go out of business, and they're buying them, expecting them to get back to those previous prices. Well, maybe they're in for a bit of a wake-up call, because I don't think they're all going to go back to those previous prices. But anyway, I think everyone kind of realizes that the US government is really committed to bailing out Ford and American companies like that. So people are pretty confident that Ford isn't going to go out of business in the short term. And they've seen that the stock price has dropped a lot, so they think this is a good buying opportunity. What are my thoughts? Personally, right now, I wouldn't be interested in Ford. Ford can make a huge amount of money when times are good, so their price to sales ratio is really low. However, before I'd be interested in buying Ford, I'd need to see some sort of electric vehicle that's actually okay. Like, even if they brought out an electric vehicle that was okay, like the Mach-E or something, to challenge it in that industry, I might be interested if the stock price was still low. However, at the moment, I've no real interest in it. As I mentioned, they're just getting into the downward progression of their cycle, so I think they've a little bit longer to go, and they'll probably remain quite low for a number of years. And maybe if they unveil working electric vehicles that are at a moderate price, they probably won't be as good performance-wise as Tesla vehicles. But if they're a little bit cheaper and don't look terrible, then maybe the stock price will start rising back up again. However, they're really behind, so I don't see them getting back to really high levels. You could potentially, if you buy it in a few months, if it keeps going down and down and down, and you try and find the bottom, you could get a small return on Ford. However, it's definitely not for me. Their balance sheet is pretty atrocious. They've had to take on a huge amount of debt to survive these times. So I'm really interested in a balance sheet, because that really adds or subtracts from a company. So most people don't pay enough attention to the balance sheet, but it's one of the first things you should always look at in a company, and their balance sheet is not great at all. So for me, absolutely no interest in this stock, so it shouldn't be the number 2 in my opinion. So I'm going to give this one a 5 out of 10. And finally, we're going to get to number 1. So before I reveal what number 1 is, I just would please ask you hit me a thumbs up if you're enjoying the video. Make sure to subscribe. So finally, number 1. I might have given you a little clue there, but number 1 is Aurora. And Aurora grows those magical plants that you might have heard of. So Aurora is a stock that I bought probably a year ago without really researching the company at all. So learn from my mistakes. Make sure to research a company when you're investing. But it's crashed so much, but it has rebounded a little bit. But anyway, this industry is going to be enormous in the future. But the problem is, everyone knows this industry is going to be enormous in the future. So Aurora, once it came out, there was all that. It went into an extreme bubble. Those stocks in that industry went into an extreme bubble where their price to earnings and price to sales multiples were just astronomical, and they've subsequently crashed quite a lot. However, they're starting to get to more reasonable levels, I believe, at these prices. Aurora is starting to look like a better spec stock. They have a price to sales of 5, which is somewhat fair for such a fast growing industry, such a fast growing company. Their revenue is growing at crazy rates. So I think even though their price to earnings ratio is still really high, it's starting to get a little bit more attractive for a speculative investment. So I probably will do a more detailed analysis into this stock. So make sure to stick around on the channel for that one. I think it could potentially be a buy under $10. Their balance sheet is actually okay. However, they're losing a crazy amount of money, and that's the problem. So it's definitely a very speculative stock still, and it definitely should not be the most popular stock on the Robinhood app. But we can kind of see that the millennials are not afraid of risk, and they're really going for the high risk and supposedly high reward stocks. I think Aurora, I'd classify this one as a very high risk, high reward stock, because their growth is insane, but the growth in the amount of money they're losing is also insane. So I potentially would be interested in buying some more Aurora stock if it drops below $10, and I'll probably make a video about that in the future. So comment below if you want to see that one as well. So before we finish, I just want to give an overview on the investing mindset of all these millennials and the kind of theme that they're going after. So you might have noticed they're all kind of going for these high risk, or what seems like high risk, high reward stocks. So let's just run through what these investors are doing right and what they're doing wrong, and how you can how you can learn from this and improve your own investing game. So as you can see, like with a few of these stocks, a lot of the Robinhood users have just bought them because they dropped a lot, and they think, oh, they dropped a lot and they have to go back up to those previous levels. So that's a problem of anchoring, which is essentially where people think, oh, the stock price used to be there, and when it was making this much money, and so if it makes that much money again in the future, it'll be worth that again. But that's not how it works, unfortunately. And a lot of these stocks won't even make that previous amount of money for a long time. You have to factor in the debt they're taking on and how their industries will have to change because of the coronavirus. So a lot of these stocks seem like they're high reward stocks, but they're actually high risk, low reward stocks. The worst kind of stocks you can buy. The kind of stocks that we want to get are low risk, high reward stocks, and they're hard to find. So, but you can find them. I've talked about a good few of them on my channel a number of times, so make sure you're looking at my old videos. But I like to go for low risk, high reward stocks, or high risk, very high reward stocks, or low risk, very high reward. But I don't think that's really found very often. Just to learn from my mistakes, I bought Aurora and Carnival Cruise without really researching the companies. And most of the time, whenever I've done that, I've thrown like a small amount into these. Like I didn't throw the house into either of these stocks. But anytime I throw a little bit of speculative money into a stock without really researching it, usually I lose money in that. So I don't recommend doing that. So learn from my mistakes, learn from these Robinhood users' mistakes. And finally, just most people should be investing in index funds. I always say it, but I just want to reiterate it here, that it's extremely hard to beat the stock market. And if you want to beat the stock market, you really have to be working hard, researching these companies, researching industries, and making your own decisions, and not just picking stocks because they've dropped a lot. So if you want to make money in the stock market, like a lot of these Robinhood users think, oh, I want to make I don't want just an 8% return. I want to make 100% return in a few years. I don't want to just make 8% a year. So they buy these really high risk stocks that they think will make them a lot of money, and they end up losing a lot of money. So just don't be that silly. Like a few of these stocks are really good picks. A few of them, in my opinion, are really bad picks. But I could be wrong. But make sure if you're interested in buying any of these stocks, you do research the company, you look at their balance sheet, and then you make a decision from there. Don't just be gambling away money, because that's what a lot of people who are just getting into the stock market are doing right now. They think, oh, the stock market will go straight back up. All these stocks will go straight back up to where they were before. It's a given. Absolutely not. Don't just follow the herd. Don't just follow what everyone else is doing on Robinhood or what seems obvious. So don't be a sheep and think for yourself. So with all that said, I really hope you enjoyed the video. I'd hugely appreciate if you could smash the thumbs up button, subscribe, and I really hope you enjoyed. I really hope you learned something, and this was kind of a fun video to do for today. Thank you so much for watching. I'll catch you all in the next video. Cheers.